Good afternoon, traders and investors. Will back here with another one, coming to you with a Thursday market recap. Hope all of you had a very good day today. And in today's markets, guys, well, unfortunately, the sell-off does continue. The SPY ending red, and pretty much every single industry in the game ending red, except for the one that's been red for the last 2 weeks, which was technology. So technology finally putting in some form of gains over the course of the day today, but it was not enough to keep the overall markets bullish. Now, we did have a little bit of weakness this morning, guys, off of the back of some jobs report that we got, and also the ISM Services PMI, which measures the inflation in the services industry. Both of those reports largely coming in mixed, but all of the attention is going to definitely be on the non-farm payrolls jobs report tomorrow. That is the single-handed report that caused us to unravel over the course of the early period of August. This was the last time we had the non-farm payrolls, guys. This Friday, right here. So I'll remind you, the sequence of what we had last month at the sell-off at the beginning of the month of August, this day right here was pretty much your the ISM manufacturing report that showed output weakness in the economy. We just had that same report right here. Then it was followed up with the non-farm payrolls, and then we had the Japanese carry trade unwind, leading into the Black Monday situation. Now, tomorrow, if the jobs data is bad, are we potentially going to get another little candle like this? Very possibly, guys. It is all going to be in the data. We've known that recently the market is very timid and very data dependent. So all eyes on that jobs report for tomorrow. So in today's video, guys, we're going to recap a few things together. We are going to very briefly go over the data that we had this morning in terms of our ADP jobs report, which measures private sector employment. And then we're going to go over one earnings that I have prepared for you guys in the name of AVGO Broadcom. They had fantastic earnings, but similar to every single other semiconductor stock over the course of this quarterly earnings cycle, they unfortunately in the after hours were down, despite posting good guidance and despite beating on the top and bottom lines. So the trend of semiconductor weakness simply just continues, guys. A little bit of the AI trade fatigue and rotation into more value and defensive oriented names that we've been noting on the channel for the past month and a half at this point. So a lot to cover in today's video, guys. After that, we're going to cover our major technical analysis rundown of our major stock market indexes, followed by our big tech names, and see whether or not there is still some buy the dip opportunities to be had in this market, or maybe is it a better opportunity to kind of hold off. So let's get right into the action, guys. SPY down about 0.24%, QQQ actually up 0.09%. And what I want to bring your attention to, guys, is the rotation in the markets currently. We've noticed that over the last about 2-3 weeks, right? Financials have been having incredible performance. Healthcare has been having incredible performance. XLP, which is consumer defensive names, right? They have been having incredible performance. Utilities as well, incredible performance. These are all defensive sectors, but eventually they too need to take a little bit of a breather. So we were on watch for that little bit of a breather, and we were saying that if all of these sectors do choose to pull back and take a little bit of a breather, as I've been saying, right? Well, we need QQQ to kind of make up for that slack. And they actually did a decent job in doing that today, but unfortunately it was not enough, guys. QQQ at one point this morning was actually up over 1%, and they gave a lot of that back intraday. Now take a look at the heat map. You will see that rotation even better here, guys. The entire rest of the market, other than NVIDIA and most of your big tech names, guys, was indeed in the red. So everything else pulling back, and just the sheer weight of your Amazon, Tesla, Meta, Google, Apple, NVIDIA was able to make up for it, right? Microsoft not green, but not tremendously red either. So just goes to show the power of your largest names in the game right now. They alone were able to keep the SPY from absolutely flushing down the toilet over the course of the day today. So nice to see that there is still some interesting rotation happening in the markets, even when the entire portion of the market was red, guys. You're talking about over 75-80% of the S&P was red today, and still the S&P 500 not dropping too much just because of the sheer weight of these names. You can see that even better on the one-day relative performance graph. Consumer cyclical and communication services were up. Technology also slightly up. But the entire rest of the market was red, led down, of course, by healthcare, industrials, and financials, taking a well-deserved break. Where do we stand on the 1 week here, guys? Well, your sectors that are still outperforming are the defensive ones: utilities, consumer cyclical, consumer defensive, and real estate. Cyclicals have really done a great job in coming back here, guys. They've been beaten down quite hard over the past 3, 4, 5 weeks of trading, and this week they haven't been having a bad week at all. So nice to see them with a little bit of recovery, but then again, to the downside, technology is still your loss leader. One slight day of gains, guys, is not going to make up for the last couple weeks of losses. So our eyes need to stay peeled on these opportunities in the market and in our continued rotation. So before we get into more technical analysis, guys, let us dive into exactly what happened this morning for the jobs report. So we came in with our private employment data, ADP employment change, where the expectation was 145,000 jobs to be added in the month of August, and we came in at a very low 99, guys. This is eerily similar to the miss that we had on non-farm payrolls last month. So we were not expecting this wide of a miss, guys. Usually you don't expect to see this wide of a miss, and that came in with pretty much our lowest read on the ADP jobs additions per month in the last 3 years. Ever since January of 2021, we have not really had this low of a number. Now, you might see the number 9 here. This is just expressed in thousands. So if you see 99, it's 99,000. You can see that we are coming down, which still goes with the soft landing scenario, right, guys? We know that keeping interest rates high for a majority of the last 2 years is going to impact the economy to the downside. It has no choice but to slow down the economy. That was the whole point. That is how you get rid of inflation, right? There's always a trade-off. If you have to raise interest rates very, very high to get rid of inflation and to prevent people from spending, well, obviously you're going to slow down the economy and slow down the jobs market in the process. The crux of the argument right now is it too deep of a cut into the economy and the jobs market as of yet? As of now, guys, the data doesn't point to that. This is still in line with a soft landing scenario. Soft landing implies that we are still going to land, guys, right? But it's going to be softer than one of your more fully blown out recessions. So are we going to have economic weakness moving forward? Most likely. But the crux of the argument, once again, is how much is that weakness going to be? Is it manageable for the Federal Reserve, considering the tools that they have at their disposal? And I still am of the opinion that indeed it is manageable. We are not going into something like a 2008, guys. Not at all. The banks are too well capitalized this time around. You do not have a bunch of mortgage derivative securities that the banks cannot price and are over leveraged on. And all in all, guys, the consumer, even though they've been pulling back on spending, they are not yet over leveraged in terms of large loans. Are we seeing a little bit more credit card debt than we usually see? Yes. But are they over leveraged? Can they not pay their mortgages? Can they not pay their cars? Not yet, guys. We do not have that destructive data. As of now, it is still a normal slowdown. And this was also voiced by the JOLTS opening report that we saw yesterday, right? The JOLTS jobs openings have been steadily coming down, but still above our pre-pandemic levels. So it stands to argue that we are still in relatively healthy territory, even though things are slowing down. Thereafter, we got the ISM Services PMI, which came in ever so slightly higher than the expectations. I'll save you all the data, guys. Just understand that the only remaining sticky element of services right now is largely the housing market, right? Housing market usually very slow to adapt to the changing economy, but I do believe that that will continue to go down over the next 3 to 6 months as a whole. So all that being said, that is your data for today, the most salient points, of course. And tomorrow, all eyes are going to be on the non-farm payrolls. The expectation is for 160K, but if we come in like something like today, right, where we're expecting 160K and it comes in at 100 or 90 or something like that, watch out. It's going to be a very volatile day at the markets. If it comes in roughly in line or better than the expectations, I don't think that the market is going to have a tremendous rally nonetheless, guys. Maybe just a lot more sideways action, a bit more muted action in light of this timid market right now. Everybody is patiently awaiting those rate cuts coming in the next 2 weeks. We do not have that many data points remaining before those rate cuts. Also, keep in mind, guys, we do, of course, have our seasonality right now. September is notoriously bad for the markets, the worst month of the year by far. So that's going to add to a little bit of volatility too. The last 4 years, I've been bringing this up a lot. The month of September, the last 4 years, has not been kind to us. 2023 down 5, 2022 down 9, 2021 down 5% again, and 2020 down a whopping 4%, guys. In relation to the moves that we've already done in the month of August, we are pretty much halfway through the median of these declines. The QQQ's still down over 3%, and the SPY still down over 2.5% from the start of the month of August. Now, keep in mind as well, usually in the month of September, most of your declines come in the tail end of the month, the last roughly 10 trading days. So we're not yet there yet, and funny enough, this period right here comes directly at the time of rate cuts. And I've said a few times on the channel here, guys, the rate cuts announcement may just be a sell the news event because it's a catch-22 for the Fed right now. If they only do 0.25%, the initial rate cut that everybody's forecasting, people are going to argue they are not doing enough. The data is coming down. The economy is slowing. The jobs market is slowing. The Fed needs to do more, and the markets may react negatively to that. Now, if they do 0.5%, which is 30% probabilities right now, people can just say, well, the Fed might be worried. Maybe they're behind the curve, right? So it's kind of a catch-22 for the Federal Reserve right now. But the one thing we have to understand is that rates will be coming down, but the effect of a rate cut, guys, is not immediate. You guys have seen, right? The Fed took rates up over 5% roughly a year and a half ago. We have not moved rates, guys, for a full year, almost 14, 15 months at this point. And only now are you starting to see signs of weakening in the economy over the last roughly 2 months. So these rate cuts are going to act in a similar fashion. It takes a very long time for them to move through the economy, right? So I would not be expecting the data to just flip a switch as soon as we get those rate cuts. So we may be in for a little bit more pain in these markets over the months of September and October, also leading into our election seasonal period as well. So all that being said, guys, before we get into more technicals or more data, now let's jump into some fun stuff, and we're going to go in through AVGO's earnings. So AVGO, guys, unfortunately right now, they are down about 6.5% in the after hours. This is nothing new to us, guys. They really had a double beat. They actually crushed it. We're going to go over the numbers in a bit here, but just understand triple beat, guys. Well, not quite triple beat. Their forward guidance came in literally in line. So it wasn't better or worse than the expectation, but they did beat on revenue and they did beat on EPS. But Wall Street, guys, did just not care. We have seen this how many times so far this quarter with semiconductor companies. NVIDIA, fantastic earnings, and the company was down after their earnings as well, roughly about 5, 6, 7%. TSM had some of the best earnings that I've ever seen from the company as a whole, and after their earnings, despite the CEO said that they could not keep up with the demand and that their book log was full for even 2025, the stock was down after earnings, roughly in this case, right? At one point about 4 or 5%. ASML, the exact same thing. They had phenomenal earnings too, and the stock was down about 12%. The only one, guys, that I can think of that went up after earnings in the semiconductor group was ON Semiconductor when they put in an 11.5% gain and then pretty much gave it all back the following week when the markets sold off. So this has been pretty much the theme of the quarter for earnings as well. And even AMD, guys, AMD had absolutely fantastic earnings. We covered it on the channel. They were only able to maintain about 4% of those gains before rolling pretty much everything back as well. So not kind to semiconductors right now, guys. The AI trade and semiconductor trade is on a pause. Even though demand is still strong throughout the rest of 2024, and even though demand will be booming into 2025, Wall Street just does not care right now, guys. There's a very big rotation going in from growth into kind of defensive positioning in the event we get more recession headlines. More recession headlines should not affect these semiconductor companies virtually at all at this point, right? But it just doesn't matter right now. It's all about the guidance. And since these companies have all performed insanely well over the last year, their enemy right now is their own previous gains, right? If they're not able to deliver outstanding performance upon outstanding performance and give ridiculous guidance increases, guys, they're not going to get rewarded anymore. So that's why I say NVIDIA as well, I said this after their earnings, they are a victim of their own prior success right now. So AVGO, let's jump right into the numbers, guys, and you'll see, I mean, there's not absolutely nothing wrong with these earnings at all. So Broadcom says it will sell $12 billion in AI parts and custom chips this year. That is a record for that division for Broadcom. Broadcom has several different lines of business, but obviously they've been part of the big AI boom over the last 12 to 15 months. And this is going to be their best year ever in terms of selling parts and software in relation to data center management, right? Take a look at these numbers. Earnings per share, 1.24 adjusted versus the 1.2. So they beat on the bottom line, and they also beat on the top line revenue number as well. But it was just not good enough. Broadcom shares fell 5% in the extended trading after guidance was in line with expectations. And this pretty much sums everything up in a nutshell for semiconductors this quarter, guys. If your guidance was just in line, right, you actually delivered the numbers that Wall Street was expecting, you still go down, right? Even though you had a fantastic quarter, it's all about forward looking. Can you beat your own success, right? and take a look at some of these semiconductor companies, guys. I'll put this on a year-to-date performance, and you can see they've been significantly outperforming the S&P for the most part, so they have to now justify those gains and hold on to those gains. And unfortunately, over the last month and a half, a lot of these gains have really been unraveling, right? So it's their game to lose right now, essentially. And as I said, a victim of their own prior success. Broadcom projects current quarter revenue of $14 billion versus the 14.04 billion expected. That's literally in line for me, guys. $40 million on $14 billion. That is absolutely nothing, right? That is sub 0.5% worth of miss, right? Probably closer to like 0.01% miss, 0.02% miss. Absolutely nothing, right? But still, stock is down 6.5% in the after hours. And I want to reiterate, I listened to a majority of the earnings call almost for 45 minutes. The CEO was continuously answering analysts when analysts were saying, how's the demand? Is the demand still good? And can you guys supply for that demand? And he said that there is huge demand through 2025 and there is no supply constraint from AVGO. So they can actually produce to this demand. So they're not going to get bottlenecked at all, not going to have any revenue slowdowns or missed opportunities from bottlenecks in their production. So everything should have been very well received, but it was not. Broadcom stock is up 75% in the past year as investors have come to appreciate that the company produces several parts that are required for big data centers or can be used to create infrastructure for AI. For example, Broadcom works on Google's TPU chip, which Apple used to train some of its AI features. Broadcom's third quarter results reflect continued strength in our AI semiconductor solutions and VMware, guys. So nothing fancy for this earnings. The company is really firing on all cylinders. No red flags that I could fall. I will spare you the financial statements of the company, but everything was good. Free cash flow numbers were decent. They took a little bit of a hit in net margin for some accounting, some accounting one-line items, things that they took over the course of this quarter, moving one section of their business to another portion of the accounting business. All of that is just jargon at this point. Just understand that it's really business as usual for them with excessively high demand for the rest of this year and also through 2025. So it should have been well received, right? In terms of the fundamentals of the business, guys, nothing wrong with this company at all. Take a look at your profit margin expansion, which is your light blue graph right here. They used to have profit margins of about 12%. Their net profit margins now are in excess of 30%. So the company's doing a great job at leveraging their products and taking advantage of the current environment. In terms of the free cash flow, look at the free cash flow they bring in per year, guys. Almost $17 billion. And on a trailing 12-month period right now, they brought in over $18.5 billion of free cash flow. So free cash flow is definitely not a problem for them. Profitability is also not a problem for them. And in terms of the future growth, that is also not a problem for them. Take a look at this EPS expansion curve. Very beautiful for the next 4 years. And take a look at this revenue expansion curve. Excessively gorgeous for the next 4 years. Obviously, a number of revenue from this is because of their acquisition of VMware, the company that they bought just a few short years ago, and they assimilated it into their business roughly 2-3 quarters ago here, guys, which is why you'll see a little bit more debt than we're used to for the company, but I still don't think it's anything that the company cannot manage with, right? So in terms of that, guys, very good business, high free cash flow business, high net margins, decent buybacks. The stock-based compensation for executives and employees is not too bad at all. They just have a problem with a little bit of medium debt, $69 billion, but with the amount of free cash flow they bring in per year and the amount of profits that they make, guys, I see no problem in the company's ability to repay and service that debt to the downside over the next couple of years. Look at these numbers. Revenue growth for the next couple of years is 15% a year. That's fantastic. EPS growth per year is 21.5%. That is gorgeous EPS expansion numbers. Gives them a forward PE at $143 right now of about a 29.8. At a first glance, it doesn't appear too high, but it's even better when we divide it by their EPS growth rate. Gives us a PEG ratio of 1.39. Anything under 1 is good. Between 1 and 2 is okay, but you want to stay closer to 1. Anything above 2 is kind of rich. So for them sitting here at a 1.39 with these growth rates and these margins and that free cash flow, the company is not, I wouldn't say it's undervalued right now, but it's relatively fairly priced. Now, in terms of the technicals here, guys, I'm going to be very, very, very picky with my semiconductor companies, especially moving forward into the next 1 month or two. If I am going to bid them, I need extremely good prices. And this one is in a gorgeous monthly uptrend, but I'll be looking in the event semiconductors continue to be weak because of the AI trade kind of not being in favor right now, not being too popular, in favor of more defensive industries, moving into recessionary headlines. If I'm going to make a play on this one, guys, I need to find it below 130. Talking about 130 all the way down to about 118. Big weekly support down here, guys. And valuation just gets a little bit more manageable. If we do make it down into the mid 120s, you're going to be talking about a PEG ratio of roughly 1.2, 1.25. And that is very good for this company, right? So the company did nothing wrong at all. They had fantastic earnings, just a byproduct of the rotation in the markets that's going out of semiconductors and into a lot of other indexes and industries that have not really done much over the last year and a half worth of trading, right? So unfortunately, semiconductor trade continues to unwind, and Broadcom is just another one of those victims. But it's a very solid company. I have to reiterate that. There is absolutely no red flags with this business at all, right? So that's pretty much everything for Broadcom. Hopefully you guys enjoyed that. Now let's jump into a little bit of technical analysis. So tomorrow, guys, for the expected move for the markets, right? I don't think I have this pulled up, but the expected move for the S&P is about 0.8% tomorrow. So can be a very big day to say the least. In terms of our technicals, we know that we are now in a daily downtrend with overhead resistance. Take a look, guys. This level right here is really preventing us from doing a lot of things. 555 down to about 554-ish. This little zone right here that we kind of collapsed through. Now the markets have tried to get into that general range of trading for a couple days now, and it just doesn't happen, right? I mean, we can extend this and grab all of the lows of these prior candles, and that'll make a bit more sense, right? So 2 little touches of the move and unable to make a bigger move into it. So in my humble opinion, guys, if the data is bad tomorrow, we probably will be visiting the lower range of support, this red box, green box, 545 down to about 538. This is where the bulls need to absolutely play defense, guys, because we do have a gorgeous potential pattern coming up here for maybe some weekly higher lows, for possible weekly trend continuation in the event that the data is not too bad and well received, guys. We can pull this off, right? But if the data is bad and the markets start to unravel as they did early August, expect the bears to be able to claw back a decent portion of this move. And thereafter, the best we can maybe hope for is a tightening range moving through the month of September as we get closer to those rate cuts. So a lot of information going to be coming out tomorrow, guys. Very difficult to derive, any predictions. We're not in the business of predicting anyways, but when you have such a large day in terms of an expected move tomorrow, this one can really go either way. If the bulls are able to get some good data tomorrow and recapture above this 555 level, they can be nicely set up to recapture this daily uptrend. But any weakness, guys, is just going to propel us into furtherance of this daily downtrend. And then we really have to watch this area, see how we react to it, guys. Huge support level coming into play once again. So we will see what happens over the course of the day tomorrow. I still stay cautiously optimistic in this market right now, guys, but I do have some hedges in place, as I showed you guys yesterday, and I am kind of orienting myself, especially for long trades, to the upside, kind of sticking to the sectors that are in favor right now. And some of our big tech names that have sold off a lot, such as Google and Microsoft, of course. Moving into QQQs right now. QQQs up a tiny little bit, guys, but barely anything, right? Fractional gains on the Qs, so daily downtrend still maintained. You can see that the bulls are trying to push. They've tried to push now 2 days in a row. They just cannot get it done here, guys. So tomorrow is such a big day for the markets. In the event tomorrow is a negative news event, guys, we will most likely start flushing right here. We need to pay special attention to 455. Flush 455, guys, then unfortunately this entire zone of support would become resistance for a back test and then furtherance of the downtrend right there, maybe taking us in once again to the 200-day moving average on the QQQs down there. Now, keep in mind, there is also this massive support zone that does come in to that range, of course, right? This was previous highs throughout the year in the month of March. So this area could be a nice next level of defense for the bulls. So just keep that in mind. And to the flip side, of course, if the data is good tomorrow, we need to measure the size of the bounce, guys. You know this already, right? Daily downtrend, if you want to see them reverse this, you need an engulfing move or very close. A 70+% retracement could do it. Get back above here, then set up for the daily trend change higher lows, and then you are back in business. We are still looking out for a possible weekly higher low event on the QQQs for possible weekly trend recapture. But in my opinion, that'll only happen, guys, if we get good data tomorrow. So very data dependent market. You guys have seen that over the last month and a half, right? Now, moving into the next one, XLF Financial. So financials finally taking a very well-deserved break. That being said, we are still in a very gorgeous uptrend right now. Coming a little bit back, we were overbought on the RSI. Nice to see that cooling off. Looking for a higher low, guys. Very simple. Anything above 43.6. Looking for a daily higher low for possible further trend continuation. Now, if we pull back too much and set up for the daily downtrend, you guys know the drill. Looking for a weekly higher low at that point, and I'd be targeting your prior all-time highs, about 44 down to about 43.50. This location right here. Beautiful weekly uptrend, just looking for a weekly higher low for possible further trend continuation. Financials should start to do really, really well. They have been doing amazingly, but leading into the rate cuts and after rate cuts, they should continue to have a fairly decent time. Now, moving into healthcare also down. This candle yesterday did not happen. This line right here was actually yesterday's high of the day and coming undone on healthcare as well. So it was a daily uptrend, and now unfortunately we have broken the lows. So the bears now do have an opportunity to set up for the lower high into lower low scenario, and that would mean daily downtrend, which would also mean in for a little bit of weekly consolidation. But you can't blame the bulls, guys. They've had 4 weeks of beautiful rally, a little bit of a breather right now for them. If they come down, probably coming down to the 12 EMA and this prior all-time high resistance area right there, which is now going to be support, and that is roughly 151 down to about 150. So tons of space for the bulls, guys. I would not be worried about healthcare or financials right now. They did pull back in a big way, but I will be looking here, guys. If we get some extended further pullbacks, you guys know I've been playing healthcare a decent amount in the past month and a half of trading. If we get some discounts, I will be firing off a lot of names for some plays on the channel for healthcare. Now, moving down into our next sector, guys, taking a look at SMH. So SMH not doing too well, and even worse in the after hours after those Broadcom earnings, of course. So right now, guys, very, very plain analysis, right? Daily downtrend is clear as day, and unfortunately, we are now below this big box, which I should put red, as a matter of fact, 238 down to about 224, right? So this entire region, which used to be support, unfortunately now we have to make it red. It is now going to become an area of overhead resistance. So in the event that the news is negative tomorrow, guys, just expecting probable lower lows on these markets. And then the real big next area of support really comes in between this zone right here. Let me just line it up right here for you guys. I can make a box, but these lines suffice, right? Comes into play at about 207 down to 199. Such a crucial level to maintain here, guys, because lose this, it's not going to look very good. This is possibly a setup for a head and shoulders, right? So we need to protect this location right here. The bulls put in a great sized bounce, but unfortunately now it is just not enough to get the job done. Still a lot of trading, but it was a 618 bounce. The bears are taking back a little bit much of the move for my liking right now. You can see the bears have taken back over 50%. And usually when you take back over 50% right there, the best that you can possibly expect to have is somewhat of a tightening range before recapturing possible upside. The worst you can get, of course, is just the weekly downtrend rollover. So we'll keep our eyes peeled over the next few weeks of trading, guys. Going to be absolutely crucial to maintain a clear focus on semiconductors and identify those opportunities. And I'll talk about them a lot on the channel, guys. But there's going to be some very good opportunities in semiconductors because we know the fundamentals of these companies have not changed. What's changed is the mindset of traders and investors in the market right now, getting a bit timid, right? These companies have run tremendously, but let them consolidate for 2, 3, 4 months, and the interest will start pouring back in because as we've seen so far with all the earnings we've covered, demand for them is going to be great in 2025. And the total addressable market, guys, is set to increase at around a 14% compound annual growth rate through 2030. So this industry is not even close to slowing down yet, but we do have these periods of extended consolidation. In my opinion, just healthy consolidation for a sector that's run a ton in the last 2 years. Now, taking a look at the Russell, so the Russell down about 0.5%. No secret there, guys. Growth is always going to get punished when we have less than favorable economic data coming out, right? So in the event that we continue this daily downtrend, probably just looking on any bounce for a lower high and then into lower low follow through. Eventually what you want to see for a reversal, of course, is a 61 or 70% bounce. And then we can possibly get up for a daily trend change in motion. So far, no signs of that. So still expecting a lower high and maybe into the lower low flush. We do have some beautiful support below us. 210 down to 208 was this previous big resistance level all year. And now we're coming back into it as support. But we've seen on the weekly, guys, probably just working for a tightening range right here. I'd be highly surprised if we continue to get market timidness and recession narratives coming out of the media and whatnot, it's going to be very hard for your IWM Russell to really run. So the best we can possibly look for is maybe just a tightening range while we kind of work through the woes of the economy right now in the jobs market. The worst, of course, is if we get that weekly trend rollover, probably bringing us back down into the low 190s. This is where I'm going to be camping for some positions in the event we come down there. Now moving into the Dow Jones. So the Dow Jones not looking too bad today, but still down about 0.54%. So the Dow Jones did lose the daily uptrend as well. Higher lows were cracked, and now unfortunately we are in our daily downswing. So what could we be expecting, guys? Maybe just a lower high into lower low scenario in the event the data tomorrow is less favorable than anticipated. Probably just going to continue this daily downtrend slide, which leads us into a bit more weekly consolidation. We know the Dow Jones has been in a beautiful weekly uptrend, probably just hunting for a weekly higher low, coming down into a nice area, right? They're trying to play defense at the prior all-time highs, 40,600, but I think we could probably give back a little bit more. I'd look for confluence right here, prior all-time highs, and you have the 12 EMA, which is there as well. That's about 40,300 down to about 40K. So that's probably where we're looking for the bulls to take a little bit more support before maybe giving us a little bit more rally into the tail end of September and possibly October when we get through all this volatility, right? Now, moving into our next set of items here, we're going to go through big tech. So we're going to go through these a little bit quickly because not much has changed. And before we do, you guys know the drill. Let's get some coffee and let's get right into it, right? So Apple 0.69% to the upside, not looking too bad, but once again, guys, just remember that we are using this prior channel as some overhead resistance. You can see we got rejected, a little bit of a wick into this channel right here and continuously getting rejected. So pretty sure that the bears are setting up for the lower high as we were predicting, right? Lower high and possibly lower low flush daily downtrend moving into this area of support 220 down about 214. So we are almost there on Apple. In the event we kind of lose this area here, guys, well, we're just going to be looking for extended weekly consolidation. We know we lost the weekly uptrend. The bulls had a beautiful bounce. The size of this bounce is not to be ignored at all, guys, right? Over 85% bounce. So usually the bulls do have a great chance at setting up for a weekly higher low for possible weekly uptrend continuation, but lose more than 214, guys, and the bears will take back too much of this move, and you may just end up in a scenario where you have a tightening range on Apple as well. So myself personally, I've said this many times on the channel, I will only be playing Apple if we get some significant consolidation back to around the 205, 200 area. It's a gorgeous monthly uptrend right now, but I want to see a little bit more back test, a little bit more weakness in Apple because the valuation right now at about 220, it's over a 3-peg, guys. This is way too expensive for me to be buying Apple. I'm not selling any shares, but it's just a hold for me right now. I'm not adding and I'm not doing any swing trading on the company either until we possibly come down to the 205, 200 location. Moving into AMD right now. So AMD down about 1% over the course of the day. And we know that AMD has been having a very, very tough time over the past couple of weeks, right? So daily downtrend, unfortunately for the stock, just does continue. Keep an eye on the lows of the Monday session. If we crack them, then your daily downtrend simply just continues at that point. And we are now coming up on a crucial moment in time. Yes, this green box that we're in right now is an overall area of support. You can see it back here was the all-time highs. Congestion right here, big support for the markets after the August drop, and now we're coming into this location as well. So first line of defense is these guys right here. Support, resistance for the markets, temporary little level right there, about 137, 135. And if we come down, then we really need these bulls right here at about 130 to hold the line, guys. Because if not, the lower support area is going to hurt a lot on AMD. That will be all the way down to roughly 120 down to about 110. So my strategy on AMD remains the same. Because we know that the bulls do not control any of the longer term timeframes. Monthly, downtrend. Weekly, looking like a downtrend continuation as well. On the daily, obviously a downtrend. So we control no time frame. So we got to be careful with this one. The only fashion that I'm playing AMD is I'm selling options. I am selling put options more specifically, trying to get below the current price from about 8 to 10% on any given week. So it's going to allow me to buy the stock a lot lower than it currently is in the event we continue dropping. And I will keep doing that, guys, until we really hit this area right here, 120, 110. I think the valuation at that point will be absolutely crushed on this stock. If we get down to 120, 110, the peg's going to be around a 1, and then it's going to be a no-brainer, guys, because as I've said multiple times on the channel, the thesis for AMD being a competitor to NVIDIA's data center applications, right? The thesis only starts playing out in 2025 and onwards. This is where most of their EPS ramp comes in play. this is also where a lot of the revenue ramp comes in play as well. So if we're in this for the long term, guys, it stands to argue we have to let that thesis play out, right? So no reason to be nervous about this stock right now. If anything, I will be adding in these lower locations. Now, moving into Amazon. Amazon up significantly today, 2.63%. Amazon was actually up over 3% over the course of the morning, and now just slightly consolidating. Amazon right now really in a bit of a tightening range, as you can see, right? So what the bulls are trying to do, we set up for the daily higher lows, they failed the push, now tightening range and trying the breakout. So we're trying to set a daily uptrend within a range of consolidation. It's looking fairly decent right now. Where are we consolidating above, guys? Look at these 2 weekly candle rejections, right? Same thing over here. What is this green box? 172 back to 160. I'm glad you asked. It is the previous all-time high resistance from 2020 and 2021. Now it is acting as beautiful support for these markets. So I do believe in the bulls' capacity right now to possibly be setting up for the weekly higher lows for maybe a sustained move with a weekly uptrend higher, bringing us back into the mid 180 level. So Amazon right now is looking very, very healthy, but pay special attention to the data tomorrow, right? Even the healthiest looking technical setups can get completely erased in the event that we have bad data and the market just starts running away with things to the downside, right? So keep an eye on that on Amazon. One thing is for sure though, if we start coming back down into this lower location in the high 160s, mid 160s, I will continue to play short put options. And if we go even lower, guys, 160 or breach 160 like we did last August the 5th on that Black Monday, that is where I'm going to be going fairly heavily with some call options. It should be a tremendous year for Amazon, the year of efficiency for them, of course. So we'll be looking, if we come down a bit further here, guys, I will be looking to shop for a lot of Amazon. Moving into Google right now, Google down about, Google actually up. So used to them being down, they're actually up 0.5% today. But overall, guys, the chart is not looking the best, right? We are trying to protect, desperately trying to protect the actual August 5th lows. Those Black Monday lows, we are right back to them, guys. Google, unfortunately, being in the headlines right now for their Department of Justice lawsuits, European lawsuits, reminds me a lot of Apple, roughly 3-4 months ago when they were going through the same thing and the stock price was suffering. These are just temporary struggles for Google right now. I do not think their business is going to be affected by it in the long term. So I am definitely a buyer of Google at these levels and even lower. That being said, daily downtrend right now is clear as day. If we do get a bounce, probably just looking for a lower high for possible lower low continuation. Why do we have that bias, guys? Well, because the weekly is not looking the best, right? Very weak bounce on the weekly time frame. Take a look right here. The size of the bounce only barely 35%. That is just not going to get the job done, and it opens the door for the bears to do exactly what they're doing right now, which is delve into a weekly downtrend. So in the event we start coming lower on Google, guys, down here's the next big area, 152 down about 145. Big, nice area of congestion right here in February, and that is your prior all-time highs from 2021. So this area should be standing the test of time fairly well. And at that point, we are also still looking for a monthly higher low for Google for some possible trend continuation, guys. The valuation on this one is absolutely amazing at a 1.22 peg. It is the cheapest company in the entire Mag 7, guys. And it's Google, right? They dominate essentially every single business that they're in. Well, maybe not the Android business because Apple has, most of the share there, but still, right? You guys understand the point. It's Google. They're not going anywhere, guys. They're an octopus. They have arms in every single industry. So to lose their moat would be very, very, very challenging for the company to do, right? They'd have to purposely try and lose their competitive advantages at this point. So I will be a buyer of Google, and right now is still a very good opportunity to buy some Google, down 17% from the all-time highs. Usually been a very good time to buy Google anytime they drop that amount. And in the event we come down to this green box, that'll be 21 to 26%, guys. Screaming buy opportunity for Google. So I will continue to write short puts as we move lower. And if we come down to this location right here, you will see some very heavy leap call options from my part on Google. Now moving into Meta right now, is my camera a bit yellow right now, or is it just me? Something is off, right? I promise you guys, I don't have jaundice right now. So let me just see if I can possibly fix that. I know it's kind of the end of the video, so maybe what I'm doing right now is somewhat useless, but let's try to fix it real quick. Is that a little bit better? I look a bit healthier right now, right? So I'm sorry about that, guys. So moving into Meta. So Meta still in a little bit of a daily downtrend. So that being said, we're going to be looking possibly for the downside continuation in the event that the data is bad tomorrow. Daily downtrend can simply continue if we break yesterday's low. Now, where could we be heading into if we continue to the downside, guys? Well, we're probably looking for maybe downside continuation into the 483 down about 461. We've been trapped in this kind of sideways, very wide range of consolidation virtually for the entire year so far. Meta is just accumulating right now as its fundamentals continue getting better and better and better. Now, keep in mind the valuation of this one, even at $500, is extremely cheap, talking about as cheap as Google almost, and they are still at the all-time highs. So all-time highs sometimes can be deceptive, guys. Just because something is at the all-time highs doesn't mean it's expensive. Meta is actually cheaper than a lot of the companies that you may be looking at right now. The free cash flow yield is also amazing. So this one has gorgeous fundamentals, and we do still have a very nice engulfing move, possible cup and handle. If the data is good tomorrow and we get that nice engulfing move, trying to reclaim this daily uptrend here, guys, that's going to be a weekly cup and handle. Usually these patterns are extremely good for follow through. And at that point, we may be heading up to 550, 560 as our next target. So I like Meta right now. It's just kind of an in between, right? Depending on the data tomorrow will give me a better indication of whether or not I want to sell some options in this range down here, or whether or not I want to go for the play on the breakout of the all-time highs. Moving into Microsoft right now. So Microsoft down about 0.12%, not looking too bad, but still also not looking very strong, right? So Microsoft's kind of been struggling for the past, let's call it roughly a month, almost 2 months at this point, right? So let's just call it for what it is. Has been weak, but we are coming into a big area of support. Daily downtrend is still underway. Just looking for that lower high into possibly lower low if the data is bad tomorrow. If the data is bad tomorrow, 402 down to 390, guys. This is the big area of support. This is where I will be doing a couple of things. I'll be adding Microsoft shares to my long-term portfolio because now we'll be at a discount of roughly 14-15% from the all-time highs. Usually always a very good proposition to be buying one of the most solid companies in the entire world, guys. Nothing, trust me, on this decline from Microsoft, nothing has changed with the fundamentals of their business. Just a healthy technical pullback, in my opinion. Take a look at the weekly. The weekly is also suffering from the Google syndrome, right? The Google syndrome is basically not having a high enough bounce. Barely a 50% bounce, so it opens up the doors for the bears to at least retest these lows, or possibly if the market really starts unraveling with this recession narrative, possibly even breaking the lows and heading to our lower area down here, 365 down to about 341. Now, we'll tackle that if ever we come to it, but suffice to say, I am a buyer right here. I will be writing some put credit spreads in this location right here, just in the event that we set up for a nice weekly higher low and try and make an attempt at this higher end of the range if the data proves to be better than expected, right? So Microsoft, I like it a lot, especially for adding into our long-term portfolio here. And I even like writing some credit spreads down here. I'm not yet going to do some call debit spreads on Microsoft. I'll keep it to shares just because I understand there's a real risk of us rolling over this level right here, guys. My level for the ultimate long form call option plays is probably going to be down here, 375 down to about 350. If I see those levels, expect to see some leaps from me on Microsoft and probably a lot of very heavy call debit spreads with a lot of time on them. Moving into Netflix right now. So Netflix also not looking too bad today, 0.58%, but we know that Netflix kind of lost the levels in the last few days, right? Daily downtrend, barely setting up a daily downtrend, but it is, got to call it as it's, got to call them as I see them, guys. Daily downtrend is in motion right now. So in the event the data is bad tomorrow, lower high and probably lower low is likely. At that point, we'll be targeting our lower support area of 653 down to about 630. Interesting location for Netflix as well, because as we know, we have engulfed the weekly move right then, right? We had the weekly uptrend, loss of the weekly uptrend. Now the bulls are trying to get it back. So we'll be paying a special close eye on this area right here. If we come into it, once again, that's 655 down about 630 for the setup for a weekly higher low and possibly blasting through the all-time highs. Netflix looking gorgeous, guys. Look at this beautiful monthly uptrend. And really, the bears are trying to play defense at the all-time highs. But I do believe that eventually at one point throughout this year, 2024, Netflix will probably be able to break that up. Most likely, if we set some bull flags right there for the next couple of weeks through September, may just be in the month of October and November when you do see that monster rally from Netflix continue. Moving on to NVIDIA right now. So NVIDIA is really sitting on thin ice. Of course, they are down an extra 0.7% in the after hours because they are correlated to Broadcom's earnings, even if they don't even do the same products at all, guys. Not even close, right? They're still in the same industry, so they kind of get dragged down in the mix. That being said, Daily downtrend is clearly in motion right now, so any larger form bounce will most likely be looking for a lower high for possible lower low continuation down, right? Keep in mind, if we do get that bounce as of tomorrow, if the data is good, we'll probably be retesting this location right here. All of the short-term moving averages are here, 12, 26, and the 50. So in the event we bounce here, guys, looking at overhead resistance, 115 to 120, and then it'll be up to the bulls whether or not we can create some space to reset this into a daily uptrend, or if we just start revisiting the lows and flush down to our larger area of support, which is this guy right here, 103 down about $94, guys. This $10 range is going to be crucial for NVIDIA to protect, right? We know we've been in a weekly downtrend. The bulls had a great move, so now you want to see them protect this as best as they can and maybe delve into a tightening range, similar to what we had last fall season as well. This would be very healthy sideways consolidation for NVIDIA, in my humble opinion. The last thing you would want to see, though, is in the next few weeks, we lose the 92 area, guys. That would be really, really bad. It would be a weekly downtrend continuation, and also, right, very, very, very heavy monthly pullback right here. If you give back almost all of this monthly move all the way down to the $80 range, guys, then it may set up for some monthly consolidation, and that can take possibly 3-4 months to resolve before we get a cleared new march towards the all-time highs, right? So a very, very, it's going to be a very, very interesting time, rather, for NVIDIA. Sorry about that. I don't even know what word I was actually looking for there. I really meant to say interesting. I was trying to find a fancier word for it, but it didn't work. So anyways, a very interesting time coming up for NVIDIA, but just understand that I will be playing this the same way I play AMD, looking to write short puts under the market, usually watching for a big red day, and then looking to maybe write 6 to 8% below that, looking to possibly accumulate some positions in this lower $90 range, all the way down to $80 if we get there. I think the valuation is a lot more manageable there, and it's going to be very tough to predict where semiconductors end up over the next 1 to 2 months. The best we can do is play the volatility, so that is how I'm going to be playing the volatility. Now, moving into Tesla. So Tesla, once again, defying gravity today, right? After doing pretty much nothing for about a month, Tesla just chooses. While the rest of the market is kind of consolidating in pain, Tesla just goes on a monster 2-day rally, almost up 10%, guys, in the last 2 days. So congratulations to any Tesla bulls that were positioned for that. I was definitely not, but still got to congratulate those who were, right? Daily downtrend, engulfing move right now. So what the bulls are looking to do is on the higher time frames, weekly recapture of the weekly uptrend. Not looking too bad, using the moving averages as support and setting that weekly uptrend in motion. So now, once again, our up overhead targets, guys, are going to be roughly 250 all the way up to 260, right? Going to be challenging for Tesla to get up there, especially if the data tomorrow is negative. But in the event the data is positive, guys, we may just see one of those Tesla rallies where they kind of rally into the robo-taxi event, and maybe then it's just a sell the news event, exactly as we had back here, right? So possible that we can rally, guys, but I would be very, very surprised if Tesla takes it upon themselves to start blasting through this location as if it's not even there in the midst of a recession narrative, right? So all that's to be seen for Tesla, though, but congratulations to the bulls. As for myself, I can't really play it. I'm looking to play short puts, guys, below 190, right? I really want to be writing short puts down here because I'm just not convinced that this is going to be Tesla's time to start breaking out and going on its all-time high rally. In my humble opinion, if it's going to do it, it's when the consumer is in a much better situation than they are right now, maybe only starting in the spring of 2025, something like that, right? So I'm very hesitant to play Tesla, even though short-term it does look bullish right now. I'm going to play this one conservatively, not just Tesla, but I've been playing the entire tech sector very conservative as of recently, guys. So once again, congratulations to the bulls. Watch out for the daily higher lows when they set them here, guys, looking for a daily higher low for possible daily trend continuation. The last thing that you want to see, though, is kind of losing this momentum right there and then breaking these lows right here and losing the weekly uptrend as soon as you got it. That would be bad. That would probably be a hint of us heading lower into consolidation in the maybe 200 to about 180 region, where we've kind of spent a lot of this year so far. Now, lastly, Palantir. Palantir not looking too bad at all, looking quite not too bad in light of how much they've ran, right? They really haven't given that much back. That being said, down 1.41% and daily downtrend still underway. So now that we know we're in a daily downtrend here, guys, still looking for weekly consolidation, and we're using our support area right now, 29 down to about $28. I've talked about this a lot. prior resistance from 2020 and 2021. So now that we're above it, it should be acting as some good level of defense for the bulls. Now, in the event we continue moving lower, there's tons of space here, guys. Look at this gorgeous weekly uptrend, right? Tons of space. Anything above 21. Looking for a weekly higher low for possible further trend continuation. I'd like to see us pull down a little bit hard into here, 29, 28, so that I can write some short puts, maybe around the $27, $26 range. And I'll probably be going with some decent size if we do that. All in all, though, Palantir not looking bad. Classic breakout, retest, and maybe run trade. So I do want to target this area. If we come down here, guys, I will be targeting it for some swing trades slightly under. That way, if they do pick me up, you know, because it's a general range, we can kind of extend this a little bit further down to maybe the $27 range as well. All you have to know is that we broke out of a very big level. We're retesting that very big level. Usually that provides a very good trade opportunity for at least a first form bounce. So that's a trade I'm going to be looking for on Palantir. Looking quite good, all things considered. So that's everything I had for you guys today. Hopefully you enjoyed the video. If you did, guys, consider dropping a like on the video. I would really appreciate it for the growth of the channel. Second, consider subscribing if you're new. Would love to have you back here. We do these videos every Monday through Friday after the close. So hope to see you back. And if you have any questions at all, guys, please feel free to reach out in the comments. You guys know me, anything goes. You want a second opinion on a stock, technical analysis, an options play, macro discussion, anything you want, guys, leave it down below. And I usually get back to you within 24 hours. And also as well, guys, if you want to have a more personal experience with me and my community of traders that we have put forth in the private Discord right now, feel free to click the link below, guys. All the details are down below. We get private live streams every Monday to Friday. You can chat with me all day, all the live trade setups, the trade alerts, and so much more. So if you're interested, right, always feel free to click the link down below for more information in the description. So take care, guys. Big day tomorrow. I will see you after the close. Be careful out there. Peace.